SAAS is ass. Find other stocks to buy. What's up to all my sophisticated DGens? I'm Darren, aka Cash Moolah. I'm a certified public accountant. I run my own accounting firm that specializes in advisory and corporate taxes for small to medium sized businesses. I'm an active investor in the stock market, and I like to take borderline degenerate risks. Disclaimer: I'm not a financial advisor. The views on my page and my videos are strictly for entertainment and educational purposes. My goal for this channel is to put out videos on a variety of topics, like my opinions on the financial markets, including my predictions on stocks and crypto, my takes to the financial news, and occasionally provide tax, business, and wealth generating tips, whatever my heart desires. This is my first video, and I imagine these videos in the beginning will be ass, but that's okay because as time goes on, it will get better. If you made it this far to the video, please hit the thumbs up button or subscribe for more financial content. So for my first order of business, I'd like to give you my honest take on the current state of the market. Today is February 25th. The S&P is near all-time highs, but it doesn't feel like it because if you're a degenerate retail investor like me, you've probably overweighted your portfolio in SaaS companies. I like to dub Q1 2026 as the SaaS is ass era. Here's what I think. The SaaS sell-off doesn't feel like it's over, and quite honestly, more drawdowns may be ahead. What's unfortunate is that this re-rating in SaaS is real, and I don't see most of these companies at prices that were where they were 6 months ago come back in the next 3 years. I mean, take a look at a company like Palantir, which is the current king of SaaS. They reported 70% growth on their last earnings, and the company is down 30% from its peak. Like most of you, for a few weeks, I thought this AI disruption sell-off was a joke that would go away quickly, but it's evident that this is a legitimate threat to the SaaS industry, and the SaaS re-rating looks like it will be permanent. Take Intuit. Intuit is a company that my accounting firm is a big customer of because we use a ton of their products like QuickBooks Online and their professional tax software. They recently just announced a partnership with Anthropic, who are the makers of Claude. Based on this press release, Intuit admitted, for lack of a better term, if you can't beat them, join them. On the surface, this partnership appears like it could be favorable to Intuit, but as you peel back the layers, you can see that this is a potential Trojan horse for Intuit. As someone who's not really too deep in the technicalities of AI, I can't tell you with full confidence if this is bad for Intuit, but it does look like they're giving Anthropic all the training data it needs for Anthropic to eventually roll out its own version of agentic accounting and tax software that will require minimum human involvement. And as an accountant, that shit's kind of scary. I mean, look at what the market thought about Intuit's press release. The stock pumped up pre-market up 5%, only to really close out the day slightly negative. And as you're probably aware, Citrini Research dropped a well-written article that went viral on February 23rd that highlights a dystopian, not-so-distant future where AI replaces most white-collar jobs and the unemployment rate reaches over 10%. This article takes you through the timeline of events leading up to the moment in time in June 2028. Obviously, this spooked the shit out of the market because most SaaS was down big, and the sell-off hit other companies like DoorDash and Visa and Amex, who were down well over 7% that day. Listen, none of us know where the exact future holds, but we can damn sure do the research, run the numbers, and make the best informed decisions. With that said, I'm going to leave you with a cliffhanger for my next video, which is a company I started opening a position in. The market has sold the stock off, and I truly believe this company is severely undervalued and has a ton of upside over the next 1 to 5 years. I think it could be the next Monster Energy stock of our generation, but realistically, that could be a reach. So the company I want to tell you about is Vital Farms Inc. The ticker is VITL. Vital Farms is a company that distributes organic eggs from pasture-raised chickens, or chicken farms, and they also distribute butter. Essentially, they sell those bougie eggs at your local market or Whole Foods that will run you anywhere from $10 to $12 for a dozen eggs. Disclaimer, I am a customer of their products and no, I'm not rich, but when I buy these eggs, it makes me feel like I am. So I'm going to do a deep dive video on this company soon where I'll give you my full investment thesis as to why I think this company is severely undervalued and has massive runway over the next 3 to 5 years. And also full disclosure, I have an active position in Vital Farm stock, and I can say it makes up over 5% of my portfolio with an average cost basis of about $26 and change. There's a chance for me to expand that position to about 10%, maybe even up to 20% of my portfolio. Yeah, that's pure degen shit, but sophisticated degen shit. All right, my fellow sophisticated degens, thanks for watching my video, and I will catch you on the next one. Peace.